What's good, people? Welcome to Flex Finance. My name is Daniel. I'm here to help you guys make money and save money. Today we are discussing how to invest for beginners that don't have a lot of money to start with. The first thing is taking advantage of bonuses. If you guys use the links in the description, you can either use Robinhood and you guys can get a free stock, or M1 Finance, and if you use M1 Finance and you invest $100, you guys will get $10 bonus. You can actually use both. You can sign up for Robinhood, get your free stock, sell that free stock, invest it into M1 Finance or into a stock in Robinhood that you actually want to invest into. You can use that $100 into M1 Finance to get $10 bonus and move that bonus back into Robinhood, or you guys can use both if you want. You guys get both bonuses, move that to one platform, or use both platforms, which I do. The second thing is being flexible. Now, a lot of people have an idea of how they want to invest, and that's great. It's great to have a plan, that's perfect. But the thing is, if you guys don't have a lot of money to start with, you have to be flexible because those plans can change. A lot of people want to invest into dividend stocks, which is great. I invest in dividend stocks, but the thing is, if you guys don't have a lot of money, you guys can't consistently put money into those dividend stocks, which is what you need to do in order to make the most of those stocks. Because the more dividend stocks you buy, the higher return you get. If you guys can only buy 1 or 2 shares every month or two, you're not gonna get that much of a return, and that's not a great way to invest, in my opinion. Instead, what you guys can do is actually my third thing here is invest into penny stocks. Penny stocks are much cheaper, and if you guys do your homework right or follow me, I'll give you guys some stock alerts. You guys can get a good return quickly. So, for example, I bought a stock named IDEX for like $1.20, and I re-upped at $1.40, and I was able to sell a good majority of those shares at around $3.80. So I made a lot of money that way, and it was quick. I love dividend stocks, but it's a long-term game, and if you guys don't have a lot of money, it's not a great way to start. Also, just for penny stocks, you guys want to make sure you diversify. I mean, diversifying is crucial in general with investing, but here I'm talking about penny stocks in general just because penny stocks are highly volatile, which means the price go up and down quite a lot. And you guys don't want, for beginners, when they see red or negative prices in their accounts, it's kind of scary. So to offset that, you want to make sure you diversify. So if some of your stocks are down one day, your other stocks will make up for it, and vice versa. The fourth thing is, don't buy stocks you cannot afford. Now, in a perfect world, you would have all the money that you could possibly get your hands on. You could buy Apple, Tesla, Amazon, all those big stocks that make a lot of money and are worthwhile. The issue is, most people don't have the money for that. And now, a lot of people would say, Daniel, of course I'm not gonna invest in a $2,000 Amazon stock. But what about stocks like Kroger, which are $30? I actually own Kroger, and I learned quickly that if you guys want to make money, you have to start with stocks that are cheaper, because I have Kroger at around $32, and it's a dividend stock which I believe in. It's great. It's a good business. But when the market dips, what you want to do is called dollar cost average, which means if I buy a stock at $35. And the next day the stock drops to $30, now I'm like, oh, I've lost $5. But no, not really. You guys can then buy that stock at $30, and your average share price will drop to around like $32, $32.50, if I'm doing my math right. So that's what you guys want to do with stocks. But what if you don't have $30 just sitting around to be able to dollar cost average? Well, you're losing out. Now there's nothing you can really do. So that's why I'm saying, don't buy stocks you can't afford. Even $30 is a lot for most people. If you guys have a stock that's less than $10, it's much more manageable, and you guys can really dollar cost average well. I think the best way to do it is with penny stocks. I've done it a lot. It's much easier, and when the penny stocks do fall, you guys can take advantage of that. And I have a video that the link will be in the description to why negative markets are actually a good idea, a good thing, not the worst thing in the world, and what you guys can do. But it's basically dollar cost averaging. You guys can lower the average cost of your shares when the market dips. But you need money for that, so buy stocks you can afford. The fifth thing is, if you guys are not good at budgeting, use an app called Acorns. That's how I started. And basically Acorns has this feature called roundups, and everything you buy on your debit or credit card, it rounds up to the nearest dollar. So say I bought, I don't know, food for 80 cents. Acorns would round that up to $1 and it would transfer 20 cents from your bank account into Acorns. And that way, you guys don't really have to budget. The money's automatically being taken away into Acorns and you guys won't really see a difference. And it's a great way to make money, to build your portfolio. You guys can also multiply it. So let's say, we'll stick with the same 80 cents and you guys have a 20 cent roundup. You can multiply the two, so it's 40 cents. I think it multiplies up to like 6 or 8. Beware, Acorns does have a $1 monthly fee. So you have to weigh out the returns and if that monthly fee is worthwhile. But I think when I was using Acorns, I saved about $17. I didn't save. I was able to invest $70 a month into my bank account just through roundups, which is great. It really helped build my portfolio. And in terms of budgeting, I didn't see the money. It just went. So I knew, I had no money left. That was it. And then I looked at my Acorns portfolio. Magically, I had money there. So that's a great way for people. If you guys are not good at budgeting, use that. The link will be in the description too. Number 6 is set up a recurring investment. Now, I budgeted so that I was able to set up a recurring investment of, in total, $80 into my investment accounts, which compared to most YouTubers or most people isn't that much. But again, this is for people who don't have that much money. And a lot of people are probably looking at me and like, well, I don't have $80 to put into my account a month. And that's okay. I started for $5 a month on Acorns, and gradually I was able to adjust my budget to that money being gone, and now being able to boost that to $80. And it will continue to boost up as I save money in certain places and as I start to be more comfortable with having less money on a day-to-day basis. Number 7 is when you save, invest. I had a friend of mine that had an Amazon Prime subscription and they were paying about $10 a month, and I told them a good thing to do would be save that $10, cancel your Amazon Prime subscription because you're not even using it, and move that $10 into your investment account. Set up a recurring investment of that $10 to Robinhood or M1 Finance, whatever you guys want to do. Because you guys, that money was leaving your account anyway. You didn't know the difference. So keep that money, keep that coming out of your account, but allow it to go to your investment portfolio. That way that money has a chance to build. I would say that this is crucial. I mean, anytime you're saving on anything, invest it. If you guys don't need it to be like for essentials, invest it. That would be a great way to build up your portfolio, and it would add to your recurring investments. Number 8 is do not panic. A lot of people panic. I've panic sold before. A lot of people panic sell, and that's where you guys lose money. So I have a whole video, again, link will be in the description, about the dips in markets and why that's a good opportunity for you guys. And I think it's important for people to know that markets will usually rebound. Even the coronavirus stock market crash in March, the market did rebound. So whenever you guys see your stocks going into negatives or losing out on money, just don't panic, because you guys have to wait it out, because it will most likely always rebound unless your company goes out of business or something, which is highly unlikely. Just don't panic, and you guys will see that eventually it might take a while. I'm not gonna lie to you, it might take a while, but the money will always come back. Number 9 actually consists of 2 different parts. The first part is when you guys buy stocks, for example, penny stocks, set a target sell price. With IDEX, for example, like I told you guys earlier, I bought it at around $1.20, $1.40, I can't remember exactly. It was under $1.50. And my target sell price was $3. And IDEX actually reached that. It actually went beyond that, up to $3.80, $3.90. And I didn't stick to my target sell price. I actually sold at $3.80, which was great, but I only sold 50 of my 150 shares. And I said to myself, the 100 shares that remain, I'm gonna wait, because it reached $3.80, it's gonna reach $4. I got greedy. I really thought, okay, I can make more money than I needed to. But what happened is the stock price fell and now it's at 150. If I just sold at $3, when it hit $3 on the way back down, I could have made a lot of money. But I was greedy and I waited, and now I'm making much less profit than I could have earlier. Now the second part is, profits are profits. A lot of people, they can sell stocks because when you're selling stocks, you're trying to get the best price possible, the best return. So you'll see stocks go up in price and you don't know when it's going to drop again. So you're trying to calculate, okay, I'm going to sell here because it might drop now. Sometimes you sell here and the stock does this and you're like, wow, I could have made a lot more money if I just waited it out, if I wasn't a chicken, you know. But the thing is, profits are profits. You know, you would rather be sitting on profits than a big loss, which sometimes happens. Sometimes skyrockets and it goes all the way back down. You know, with IDEX, if I just sold at $3, it wasn't $3.80, but $3 was still better than $150, which it is right now. So guys, take your profits, whether it's $10, $20, $5, even $2. I made $2 profit this morning and I was happy with it, you know? So make sure you guys, fear of missing out is a big thing in the stock community and you guys don't want to be a part of that. Make sure you stick to your target selling price, and if you guys make profits, be happy. Number 10, and the final thing, is reinvest. If you guys make money from dividends, if you guys sell and you guys make a huge profit or even a small profit, just reinvest, because that money over time will just grow and grow and grow. And that's the best way to really build your portfolio. And remember guys, investing is long term. You guys can't expect to be in here for a month and be millionaires, you know? You might make a decent amount of money, but it's a long-term game. If you guys want to make real money, you have to stay in it for the long term. Now, a bonus, just because you guys sat through this whole video, have patience. Now, if you guys look into the stock community, you guys will start to see this word or phrase, patience. And it will start to get annoying in a while, but that word, that phrase, it's essential because it really is correct. If you guys are patient, it pays. It pays to be patient, okay? You guys will make money if you are patient. If you guys panic, if you guys can't wait and you want to sell stock quickly, you guys will make as much money as you could, you know? Especially with dividends, you have to be patient. Even penny stocks, sometimes I waited 2 weeks for a stock to move just like 10 cents and then finally it just blows up, right? I could have sold and made like 10 cents per share bonus, which is pretty good, but that's no comparison to $1, you know, per share. So be patient, it pays to be patient. And that's it guys, thank you so much for watching this video. If you guys learned something, please like the video and subscribe. I'm trying to help you guys make money and save money. That's my whole motto. Subscribe and we'll see you guys soon.